This episode is brought to you by Mortgage Workflow Partners and the Mastering Encompass series, both for users as well as administrators. You can find out all the information about it over at masterengencompass.com. Also, if you'd like to check out what we're doing on YouTube, go ahead and subscribe to the channel using the @MasteringEncompass handle. And make sure you stay up to date on all the information, not just with podcasts, but also video content that we bring to you as often as possible. Now let's get on to the episode. Hello everyone, Larry Bailey here with Mastering Encompass. We're going to get you into another weekly market review. This review is for the week of December 16th, 2024. Before we do that, if you're using the Encompass platform, you need to check out Mastering Encompass. You can head over to masterengencompass.com. Not only is it a brand new community, but it's also going to be launching into a native iOS and Google Play or Android app. Go ahead and listen in for more information as it becomes available. We're doing a soft launch right now for those that want to go check out the community. Eventually, we will be bringing over all of the content from our current community over at mortgage.community over into Mastering Encompass because, let's face it, everyone is really just interested in understanding how to master their Encompass platform. That's where you can find all the news, updates, insights, community chats, and workshops. You can head over there again, masterengencompass.com. Let's get over into this week's review. Again, we're reviewing the week of December 16th. The Fed rate cuts, although they pared back their forecast for additional rate cuts next year, inflation was cooler than forecasted. We've got existing home sales moving higher and builders feeling more optimistic about sales in 2025. Here's the stories that we're covering today. First of all, the Fed rate cuts 25 basis points from their overnight lending rate. The next story is the Fed's favored measure of inflation came in tamer than expected. That's the personal consumption expenditures. The next story is existing home sales rise for the second straight month. The next story after that is home builders feeling positive about the future, which is great. The following story is the new construction eased in November, followed by some interesting information also of note. We've got a family hack of the week to get to, and then we're going to talk about what to look for this week, the week of Christmas 2024. So let's get into the first story. This is the Fed rate cut. Now, the Fed cut 25 basis points as expected, which brought down the range of that Fed funds rate from 4.25% to 4.5%. This decision followed a 50 basis point rate cut by the Fed made in September and a 25 basis rate cut in November. There was one dissent, which is important to note. This was the Cleveland president, Beth Hammack, who preferred a pause to additional cuts. Note that when the Fed cuts rates, they are reducing the Fed funds rate, which is not the same as mortgage rates or even long-term rates. The Fed funds rate is a short-term overnight rate that banks use to lend money to one another, but is, of course, the building block for all interest rates. The bottom line of this story is that the Fed began aggressively hiking the Fed funds rate, trying to curb that runaway inflation that we were experiencing that became part of our pandemic experience. More recently, cooling consumer inflation, rising unemployment caused the Fed to begin the latest series of rate cuts. And while inflation has cooled considerably since the peaking in 2022, progress towards the Fed's target of 2% has stalled in recent months. And of course, this information is causing the Fed to be more hawkish in their latest forward guidance. Their quote dot plot of member forecast signaled that 2 rate cuts are expected next year, down from 4, so that's half that they forecasted back in September. Although remember, these estimates can change quickly based upon all kinds of data that's coming in every week. This next story is the Fed's favored measure of inflation came in tamer than expected. Now, if you don't know what that is, that's the personal consumptions expenditure, and we see a graph here on screen. If you're listening to podcasts and you want to see what we're talking about on screen for all of our images as well as our family hack of the week, make sure you head over to our YouTube channel at Mastering Encompass, or you can head over into Mastering Encompass to check out this video replay as well. So what we saw is November's personal consumption expenditure, known as PCE, that showed that the headline inflation rose 0.1% from October, while the year-over-year reading rose from 2.3% to 2.4%. that core PCE, which is the Fed's preferred measure of inflation, which strips out the volatile food and energy prices, that rose 0.1% monthly. The year-over-year reading held steady at 2.8%, remaining near the lowest level in over 3 years. All of these readings were cooler than forecasted. Among the categories in the report, the tame readings for both shelter and healthcare contributed to this favorable data, which was reported on Friday after the Fed's meeting. Bottom line here, gang, is that while the annual core PCE did not decline further towards the Fed 2% target, this was partly due to lower replacement figures from November 2023, which was removed from the 12-month calculation. Looking ahead, readings from January through April 2024 are higher comparisons, meaning progress lower towards the Fed 2% target may be easier next year when these figures are replaced. Remember, these are all like rolling numbers. So even if the current numbers are the same as the previous month, the overall average can be lower because it's a rolling 12-month. It's all math, gang. It's all math. All right, here's the next story. Existing home sales rise for the second straight month. And we see this image on here, sourced from the National Association of Realtors. Existing home sales, which reflect the closings on existing homes, they beat estimates in November with a 4.8% increase from October. Sales were also 6.1% higher than a year ago, which the National Association of Realtors, that's the NAR, noted was the largest annual increase since June of 21. That's a big story. Bottom line here in this story is the rise in closings last month makes sense, of course. The data likely reflects people shopping for homes in September and October, capturing buyers taking advantage of the decline in interest rates at that time. You might not remember this if you're currently shopping for interest rates, but yeah, rates were down in the low sixes. Some people even grabbed it in the fives. So the uptick in buyer demand also comes when inventory was still well below pre-pandemic norms. There were 1.33 million units available for sale at the end of November. That's a decline of 2.1% month over month and an increase of 17.7% year over year. Though many homes counted in the existing inventory are actually under contract, so they're not truly available for purchase, but they're not yet closed, so they're still calculated. In fact, there's only 953,000 out of that 1.33 million active listings at the end of last month. So inventory is actually tighter than the reporting implies. NAR's chief economist, that's Lawrence Yun, confirmed that, quote, more buyers have entered into the market and home sales momentum is building, close quote. This pent-up demand for homes combined with ongoing tight supply continues to bode well for housing as an investment and continued home prices appreciation over time, unless you're buying a condo in Miami. Guys, beware, right? Real estate is not a guarantee, never has been, never will be. Do your investment strategies wisely. Always plan to lose money, although that's not your desire, but what I've seen happen to too many people is, especially in home investing or real estate investing, they think there's always going to be a positive. They don't have proper cash reserves. They don't have proper exit strategies. Be smart. Work with somebody who can help you do what you want to do. Any questions, please let me know directly. Home builders are feeling positive about the future is our next story, and you see a nice image on here, and we can see although it's very slight, you can see an upward trend line here to the home builder sentiment from the National Association of Home Builders. That's the NAHB. So after rising for 3 straight months, home builder sentiment held steady at 46 this month compared to last month per the National Association of Home Builders, again, the NAHB. While confidence remains in contraction territory, which as a reminder is below 50, it is at the highest point since April. So the bottom line here is among the 3 index components, which contains buyer traffic, that's at 31, that remains muted or remains low, while current sales expectations are 48, just below the 50 break-even level, and future sales expectation are 66. So the reality here is everything's slow right now, but home builders are feeling optimistic. And they're projecting basically future gains. The NAHB's chair, Carl Harris, noted that, quote, while builders are expressing concerns about high interest rates, elevated construction costs, and a lack of buildable lots continue to act as headwinds, they are also anticipating future regulatory relief in the aftermath of the election, aka Donald Trump and his gang. This is reflected in the fact that the future sales expectations have increased to nearly 3-year high, close quote. We'll see. We'll see what actually happens. Remember, building codes are local. So, again, referencing back to Miami, I'm only bringing it up because there was someone had posted on LinkedIn that I responded to personally, where they were citing out regulatory holdbacks for like West Coast states versus Florida in particular. And then, no lie, no exaggeration, 3 weeks later, there's reports of how many condos, brand new condos, are sinking faster than expected. And it's not surprising to me. Again, it's hard. It's very hard to build high-rise condos. You've got a lot going on. And when you think of Florida, you think of sea level rising, you think of the ground can be marsh. So, where is the bottom? I guess these condos will find out. So, on to the next story. New construction eased in November. So even though home builder confidence has inched higher this fall, builders pulled back on new construction last month, with housing starts falling 1.8% from October. The decline in multifamily starts outweighed the increase in single-family home building. Building permits, which reflect future construction, were flat for single-family homes, but rebounded for multifamily projects. I'm telling you, gang, if you watch this stuff enough, you'll see this seesaw back and forth, back and forth. I don't think it's anything other than builders being smart about how they're spending money. Again, I've got this enormous project not too far from me. I don't even know how many units are in there, but it feels like at least 300, maybe 400. And it's a combination of condominium units or apartments, and then also single family attached. So these are planned unit developments, is how I'm imagining they are, but no single family standalones. Even the development that's even closer to me, they're all attached housing. And that's mostly because people are willing to buy single family homes attached because they're big enough and expensive enough. So I'm glad the builders are figuring this stuff out. I'm glad we're getting more housing on the market. So the bottom line of the story, of course, is housing starts measure projects where the ground has already been broken, like these two projects I just described. So they're a good measure for upcoming supply. As of November, the annualized pace was 1.29 million. When we subtract roughly 100,000 homes that need to be replaced every year due to aging, we're now still well below the demand as measured for household formations that are trending at about 1.9 million at the end of September. Again, the limited new supply for housing is relative to household growth should continue. So household formations, remember, are when you've got people living together and then they split, right? And so you tend to think of kids, kind of growing up and leaving, but sometimes it's actually the parents who are kind of leaving and they want to get into downsize more. They want to have smaller space to take care of. So everybody's a little bit different, depends on the part of country. Also of note here's that extra story. So the final reading for the third quarter GDP, as a reminder, every quarter there's 3 measures of gross domestic product. So the third and final reading for third quarter showed the economy grew by 3.1%, coming in above the second estimate of 2.8% reported in November. By comparison, we saw a 3% and a 1.6% growth in the second and first quarters of this year, respectively. Economic activity in the third quarter was also driven by consumer spending, exports, federal government spending, and business investment. Meanwhile, November's retail sales came in stronger than forecasted, boosted by car sales and online shopping. Sales in October were also revised higher. And the latest weekly unemployment claims, initially losing 22,000 and 220,000 combined. Continuing claims were down 5,000 to 1.874 million, near a 3-year high. These show the ongoing trend in the labor market as it continues to figure out between employers holding onto their workers, slowdown in hiring, and people who are let go and not being able to find a new place of employment or opening up their own business. Here's a National Hack of the Week. It's National Pear Month, gang. I don't know if you knew that. I didn't know that, but now I do. So there's a recipe on screen here at this time in the recording. Enjoy the apple and pear crisp courtesy of the Food Network. I'm going to tell you what, apple crisp, phenomenal. I haven't had a pear crisp, so this recipe sounds great. Check it out. Try it. Let me know how you make out. Here's what we're looking for the rest of this week. Not only, of course, is it Christmas Wednesday, we've got November's new home sales happening Tuesday and the latest job claims happening Thursday. highlighted in an otherwise quiet week. The markets will be, of course, closed Wednesday for Christmas. I hope everybody's having a safe and as happy as you can make it holiday season. I know this season is quite tough for a lot of folks. So if you're experiencing any type of need to speak with somebody, please reach out and speak to somebody who can help you out. You can always find somebody online, or you can call helplines for that at 888. My name's Larry Bailey. This is for Mastering Encompass. I hope you guys have a great rest of your day. Thank you very much for listening. We'll see you on the next one. Take care.